Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. Today we are going to take a look at, and today is the 15th, January 15th. It is Wednesday. We're going to take a look at Kroger. This is out of the consumer staples sector. Before we get too far in the video, if you can do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever we put out any new content. I put out the Stock Pick of the Day video series Monday through Thursday whenever the market's open. We take a look at a company's stock that is pulled back on the day to see if it meets some criteria that I have set up an initial screener and makes it onto my watch list. And just because it makes it onto my watch list does not necessarily mean I am buying. It just means I'm interested in doing more of a deep dive into the company. We'll see that criteria here in a second. And the thanks button down below is available for anyone who wants to donate to the channel. Buy me a cup of tea there. Those funds, or any funds I get from YouTube, will go into my portfolio and my two daughters' custodial accounts. I'm going to split it up three ways there, and I will cover that in my Sunday updates, portfolio updates. Do that every Sunday as well. So one more reason to hit that subscribe button. Special thank you to the viewers and the subscribers to the channel. The channel continues to grow because of people like you. This is the screener we're going to run through in this video. It must meet 5 of 8 to make it onto my watch list. And again, just because it makes it on my watch list does not mean I am buying the stock. It means I am interested in doing more of a deep dive into the financials of the company, looking at their balance sheet, their income statement, looking at stuff like revenue. Is it growing over time? Are their margins expanding? Are they paying down debt? Do they have more assets over liabilities? I compare companies to other companies in the same sector, looking at their price to sales, price to book, PEG ratios, a lot of different criteria. And if you don't want to do that type of deep dive into the company financials, or try to estimate a value for the company, doing like a discounted cash flow analysis like that, that gives me an idea of what I want to pay for the stock, or a range of what I want to pay for the stock. If you don't want to do those type of deep dives, you should not be investing in individual stocks. You should stick to ETFs or index funds. Warren Buffett would recommend the S&P 500, so something like SPY or VOO, Vanguard's S&P 500 ETF, or another fund like that that tracks the S&P 500. I do VTI, which is the total stock market. S&P 500 obviously is just the top 500, but VTI I like because it, excuse me, it also includes the small caps, which the S&P 500 does not. So something along those lines would be a better option if you don't want to do any type of review of company stocks, which I get. We're all busy. Some of us don't have the time or understanding of how to do that. There's nothing wrong with that. You can always jump into ETFs or index funds while you're learning how to value a company and value a company's stock. Now back to Kroger. You can check them out on their homepage, www.thekrogercompany.com, thekrogerco.com. That's www.thekrogerco.com. That is their homepage where I pulled this information from. The history of Kroger. Our story began in 1883 when Barney Kroger invested his life savings of $372 to open a single grocery store at 66 Pearl Street in downtown Cincinnati. He had a simple motto: be particular, never sell anything you would not want yourself. Nearly 140 years later, the Kroger Company is still particular about how we serve customers and community, how we innovate, and who we hire. You can read the rest of that. And it's the same thing that they did before. They are a retailer primarily around groceries. That's really what they do. And they are under, I know they're a Kroger company, but they have a lot of other brands underneath them that are under the Kroger umbrella. You can see that here: Baker's, Dillon's, Food for Less, Foods Company, Fred Meyer's Jewelry. So it's not just groceries, but also jewelry companies. I believe this is a much higher margin business. Fry's, Home Chef, King Shoppers, obviously Kroger, the many different Krogers, Mariano's, Metro Market, Payless. You get the point. Ralph's down here, Smith's. So a lot of different brands that maybe you didn't realize were Kroger stores, just don't have the Kroger name, right? They're underneath that same umbrella though, and all of their earnings goes back into the Kroger company. So again, check them out at their homepage if you want to know more about the company, and you should understand the company first. That's why I start with that one first. Now, the reason we are taking a look at them, down 2.04% on the day. We are talking about the Kroger Company, ticker KR, out of the consumer staple sector. Closed out the day at $58.70. 52-week range as low as $44.48, as high as $63.59. They would need to be under $51.15 or lower to be within 15% of a 52-week low. So they are not quite there yet. So I look for companies around that 15% of their 52-week low or lower whenever I want to add to them. This is an existing position. We'll see my position here in a little bit. So I am waiting for a bit more of a pullback. But if it was to get in the mid 50s, I might add a little bit here just because my cost basis is pretty low. I've had this one for a few years now. This does have a market cap of 42.472 billion, a beta of 0.47. Price to earnings ratio, PE ratio is $15.53 per share. Earnings per share is at $3.78 per share. Earnings date is coming up sometime between March 5th and March 10th. They'll have that on their webpage, or you can tune into their earnings call there. I do not cover those on this channel. They have a forward dividend is $1.28. They are a quarterly payer, so divide by 4, though we will see that here in a little bit towards the end of the video, what they pay per quarter per share. Their dividend yield is starting at 2.14%, so decent starting dividend yield. Ex-dividend date is November 15th, so we are well past that. Excuse me, they did pay out on December 1st, so if you were to buy them now, you would get the next payout, but you're going to have to wait a couple months to get it since they just paid in December. 1-year target, at least according to Yahoo Finance, $65.69. So they not only see some upside here, but they see it setting a new 52-week high over the next calendar year. So that's nice to see, but it's just an estimate. Now, jumping over to the right, I like to look at dividend yield theory to see if the company is presenting any undervaluation. It's just a quick metric that I like to check the company. And to do that, you look at their 5-year dividend yield average, 2.02%. You compare it to the current 2.14%, or over here where it says forward 2.14%, same number. Since their current dividend yield is higher than their 5-year average, that speaks to some potential undervaluation. Slightly undervalued according to dividend yield theory right now. Payout ratio is low on this one, only 30.37%. I like under 75%, so lots of room to continue to increase that dividend over time. Doesn't look like it's in danger of a dividend cut. That's why I look at payout ratio. Anything to me over 75%, you can set it whatever you want, 60, 65, 50, whatever. Anything to me under 75% means the company is safe. That gives them a lot of extra free cash flow to pay down debt, make acquisitions, reinvest back in the company, and raise dividends, which is what I like to see. Dropping down here to free cash flow, we're going to see how their free cash flow, or if it is growing. Going back to January 2022, you can see $3.5 billion in free cash flow. There was a downturn in 2023 there, down to $1.4 billion. 2024, back up to $2.8 billion. Looks like the trailing 12 months, which would include 2025 numbers now, but mostly 2024, $2.18 billion. And they are repurchasing shares as well. Going back to January 2022, 1.6 billion pulled out. 2023 was just under a billion at 993 million. 2024, they really dropped that down to negative 62 million, and the trailing 12 months is up 133 million. So they are repurchasing shares, though their cash flow is a little cyclical. You can see those ups and downs. Last couple years, it looks like, and I'd have to do the math what this trailing 12 months includes, but it definitely includes all of 2024 and 2025 numbers now. We're only in the 14th of 2025, so it might be mostly 2024, though it looks quite a bit different than the 2024 readout here. So I'd have to go back and see what exactly this TTM trailing 12 months is including here in these numbers. Now we're going to jump over to stockanalysis.com, Yahoo Finance on the previous page. That's where that information came from. I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. They do have 14 analysts that are taking a look at this. They call it a consensus buy. Low estimate of $48. That would represent an 18.22% decrease from where it currently sits. Average estimate of $65.36, which is pretty close to what we saw with Yahoo Finance on the previous page. That would represent an 11.36% increase. And if it happened to hit their high of $75, that would be a 27.78 increase, and you could collect that 2+% dividend yield if you were to buy them now. Now, jumping over here into the statistics, I like to look at return on equity and return on invested capital, as well as some other numbers. The EPS down below is also out of the statistics page. But I like 10% or better for both of these metrics. Return on equity is good, 23.06%, so that is above the 10% I'm looking for there, though the return on invested capital is a little low at 8.24%, so a little under the 10% that I like there. EPS growth forecasted over the next 5 years, I like 5% or better. They're sitting at 11.83. So above the number I'm looking for there, with forecasted revenue growth of 2.16%. Now, I mentioned I am a holder of Kroger, long-term dividend investor here of Kroger. It is in my portfolio. I currently have 102.29 shares. There it was down a little bit today. I am up 30.63%, right? I have $4,600 into the position. It's currently worth $6,000. So my cost basis being down here at $45.08 is pretty low. Not quite, at their 52-week low, but pretty close. So like I said, if they were to drop down into the mid 50s or lower, I would add here. I wouldn't mind building this position out a little bit, but I want more of a pullback. I would really like it to be within 15% of a 52-week low, but I don't know that it's going to get all the way back down to 51. So again, I'll be watching this one over the next month or so. If it does drop down below, obviously below my cost basis, but below 15% of a 52-week low, this is one I would look to add to. Now, again, with their quarterly payout ratio low in the 30% range, 33.86%. Nice dividend growth on this one, double digits at 10.91%. They're saying 1 year of dividend growth. I don't necessarily agree with that. It looks like we've had definitely more than 1 year of dividend growth there. Buyback yield is negative at 0.34%. I don't like to see that. I like to see buyback yield positive. And whenever I see negative, it tells me that they are not doing a very efficient job buying their shares when they're cheap, whenever they are doing that. So I would rather see this be positive here. Shareholder yield is positive. I like that. I want shareholder yield to be positive. It's at 1.83%. Now, they do pay out on the March, June, September, December timeframe like most companies do. And going back to August 2022 here, you can see 26 cents in dividends. Now, I did not own them whenever they paid out this, what looks like a special dividend here at $6.85, but that's what that looks like to me. They raised it up from 26 cents back in August 2023 up to 29 cents, and then again in August 2024 up to 32 cents. I would expect if they are going to continue the dividend raise, it will be August of 2024 whenever they announce their next dividend raise, and I'm hoping for something around this double digit still. All right, let's look at the screener here, see how this one stacks up. Understand the business, that's where we started. Yep, they're a retailer. They sell primarily groceries, but they do have their hands, as we saw, in some jewelry retailers as well. Growing free cash flow was a bit up and down, so no check there. Growing dividend, yes. Double-digit dividend growth on this one, a little over 10%. Dividend payout ratio is under 75%, around 30 to 33% there. Dividend yield theory says they're potentially undervalued, but just slightly so. I'd like more of a pullback on this one. Buy below current cost basis or within 15% of a 52-week low. It is not under my cost basis, and it is not within 15% of a 52-week low, so no check there. Return on invested capital or return on equity, both of those need to be over 10%. We had a 20+% return on equity, but an 8+% return on invested capital, so it's got to beat both of them. So only one was in the 10% or better range, so no check there. Earnings per share growth was at 11%, so that beats the 5% I'm looking for there. So 1, 2, 3, 4, 5. Not only is this in my portfolio, it is one I want to add to. And if it wasn't in my portfolio, it is one I would be looking at. Again, I shop at Kroger. We get our groceries from there. There and Costco are the two places primarily we get our groceries. I do not own Costco. I feel like it's overvalued, but I do own Kroger, and I would love to add to this position if it pulls back a little bit. Let me know what you think of Kroger in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that subscribe button. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Kroger you'd like me to do a video on, Stock Pick of the Day, as part of the Stock Pick of the Day series, go ahead and drop it in the comment section down below. I'll work it in the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select your criteria, or seek the advice and counsel of a certified financial advisor.